I want you to have every possible unfair advantage in the world. What that means is that if you listen to this show, if you watch it on YouTube, and if you take advantage of the things that we share here, the education, the knowledge, insights, tips, tricks, all the simple systems that we show you how to put in place, you're going to have an unfair advantage over everybody else in your market. Later in the show, towards the end, I'm going to share a case study. Actually, it's an email that came in from a gentleman that does windows. Now, you might not be in the window trade, and that's fine. Maybe you do kitchen renos, bath renos. Maybe you do commercial TIs. Doesn't matter. What I want you to hear is the pain in his mind when he started and the antidote that he was able to find. That's the unfair advantage I want you to have, because as you start to make different moves than everybody else in the market, you start to look different, act different, walk different, talk different. And to get us started on that acting, walking, talking, thinking different, I want you to do this with me. I want you to, whether you're sitting or standing, I want you to put your shoulders back, and then I want you to lift your chin just a quarter of an inch. Now, I want you also to take a deep breath in through your nose and out through your mouth. Do you feel that power, that difference? That is how I want you to live. And how do I do that? I do that by finding you great guests and giving you usable information. Today's guest is Bob Gauvreau, and we're going to be talking about something that should interest you because it interests all of us, is tax. How to pay the least amount legally. Because I want you to pay the least amount. We'll talk more about that in the show. Listen, you should follow Bob and myself on LinkedIn if you haven't already. Bob's last name is spelled a little bit different. It's Geavreau, Bob Gauvreau. And you can also find him by linking to this show in the notes. And obviously follow me on LinkedIn as well. My name is Dominic Rubino. You can also follow me, by the way, on Facebook. We have a very special group called the Contractor Strategy Group. And that's where we share information like this as well. And that group is only for contractors. That's it. There's nobody in there selling anything. We're just having chats like contractors having talks about contractor issues. Let's talk about contractor issues. Why is this episode even important? And remember, I record the intro and the outro after I do the interview. What I came to realize during the meeting with Bob is that this interview here is the secret conversation that the wealthy and multi-generation wealthy people have at their kitchen table, on their picnics, at their get-togethers. Now, I don't know about you, but I didn't grow up at that kitchen table, which means I have to go out and find experts. I have to ask them great questions, and I have to listen very carefully. I'm trying to leapfrog. I'm trying to give you that unfair advantage if you didn't grow up at that kitchen table like me. I did not, right? Anyways, Bob is that expert. And what you're going to get today is something that opens your mind to opportunity. What you're going to have to do next is up to you. But no matter what, and no matter where you are in your business, you're going to have the perspective, the context, the big picture that you need to take, the action that makes sense to you. Whatever action makes sense to you. Let's say you're listening to this show, you're taking the actions, maybe you're doing one of our coaching programs, and the day comes when one day you sell your contracting business for $1 million. Now, no matter what, you're still going to have to pay tax. So dream with me for a second. You're going to have to pay tax to the government, whatever country you live in and state or province that you're in. Do you want a tax bill of, you have to choose one of these three. Do you want a tax bill of $600,000? Do you want a tax bill of $400,000? Or do you want a tax bill of $120,000? How much of that million do you want to keep? You get to start answering that question now by taking actions now. And that's what Bob and I are going to show you. And now, by the way, during the show, you're going to hear me talk about something that we refer to here as the go back calculator or the 1 hour calculator. That's one of the set of professional development tools that we have here at Contractor Wealth Systems, regardless of the podcast that you listen to. Those are critical documents. Those are central. Those are like the building blocks, the foundations you need as an owner, as a simple system to help you make decisions with logic, right? As I said, it's a professional development tool. We make it available to all listeners. Now, for those of you who are our clients or in one of our programs, right, we would also be sharing with you something called the Construction Millionaire Formula. Now, that's only available to clients because it's a lot more intense, and we actually stand next to you, literally, as you're working through it. And what it does, it helps you build a 1 year, forecast, a 5-year forecast on growth based on profitability, job size, and overheads, which, funny enough, leads back to the decisions you're going to make tomorrow when you go out into the field. If by any chance you want to learn more about one-on-one business coaching or any of the other programs that we've got, shoot me a text anytime. My cell number is 315-903-7853 and just say, Dom, let's talk. And then you know what we'll do? We'll talk. Look, as you know, in a nutshell, this podcast is about the mindset of growth and success for you as a business owner. Now, normally I do dad jokes, but today I'm going to share tax stories. My team and I went and scoured the internet. We scoured the internet, which is easier than scouring encyclopedias, but we scoured the internet to find some stories and interesting reference points on taxes, because I thought that would be different. But the reason I do that is I want to get your mind into the Bob Gauvreau interview. So here we'll talk about some people that you're going to recognize. Does anybody remember Wesley Snipes, the actor Wesley Snipes? So he served prison time for tax evasion. 58-year-old actor was sentenced to 3 years in prison in 2008, and he was fined $5 million for willfully failing to file millions of dollars worth of past tax returns. In 2010, his appeal was denied, and he began his sentence at a federal prison. He was released in April of 2013, and you guys have seen him in the movies I've seen him in too. I just saw Deadpool and Wolverine this weekend. He was in Expendables. He was in Coming to America, Demolition Man. And actually in Demolition Man, here's a serious piece of trivia. You can see him reading a book on the plane. No, sorry, this was in Passenger 57. He's reading a book on the airplane called The Art of War by Sun Tzu. And you guys know I love The Art of War by Sun Tzu. It's a great book. So there's a little story about somebody famous. Here's another one. You guys know the band ABBA? I'm sure you're all fans. You're all fans of ABBA. And what was that movie their song was featured? My Big Fat Greek Wedding? No. Which one was it? Anyways, I'm sure you guys will tell me. Anyways, they wore those terrible outfits on stage. It wasn't just for the show. In 2014, the band revealed that the Swedish tax code let them write off the costumes as a business expense as long as they were too ridiculous to be worn off stage. And that apparently isn't just a Swedish thing. Between 1999 and 2001, the IRS, which is the United States Tax Authority, let a bodybuilder in Wisconsin write off more than $10,000 in tanning oil. It also let a junkyard owner write off the cost of cat food because he claimed the feral cats it attracted helped him keep snakes and rats off the property. In 2010, this is an interesting one. Catch this story. In 2010, the IRS claimed that a prolific eBay seller had intentionally failed to keep records for more than $41,000 in supplemental income she made on eBay between 2004 and 2005. Here's the quote. That would be ridiculous, unheard of, unless there was some really bizarre reason why I kept a receipt. There were no receipts, she told the U.S. tax court, claiming this. She didn't know her activity on eBay constituted a business or that she was required to keep any records. Here's the kicker, folks. Her day job between 2004 and 2005 was at the IRS as a revenue officer. Boom. How do you like them apples? You guys will know that I have an Italian background, and my dad was actually born in a town called Locorotondo, beautiful part of town in Puglia, Italy. There's another town there that's a little more famous. It's called Alberobello. And for those of you who've been to Italy, there are these buildings there. They're called trulli, Trulli. And so if you want to hear me with my Italian accent, they're called I Trulli di Alberobello. Anyways, these are dry stone construction, round buildings that are whitewashed on the outside and have gray slate roofs. They're just beautiful. But here's how this relates back to taxes. This dry construction method, so no mortar for the trulli, was imposed on new settlers in that area so dwellings could be taken apart quickly. This was a strategic way to avoid taxes on new settlements imposed by the Kingdom of Naples. At the time, Italy was a collection of city-states, and Naples was its own kingdom. So that got me to thinking, my team and I, and sent him back, and I said, hey, find some other tax implications that have impacted how homes are built or renovated. And we came up with, there's a bunch of ones, but I thought this one was interesting. When you go to Vietnam, I don't know if anybody here has been to Vietnam, the houses are super narrow, and they call them tube houses. Here's why. The feudal state of Vietnam charged a fee based on the width of the street house facade to collect taxes. So one way to reduce the cost of taxes was to divide land into small chunks that were long and had slim front faces to build. Pretty cool. Now, it seems like we're picking on Italy here, and I don't know why my team's research came back with Italy. Maybe they're sending me subtle message. But I wonder if you guys remember a news story back in 2012. The Italian government started to do roadblocks, and they would pull over luxury vehicles, Porsche, Lamborghini, Ferrari, etc. And they would ask for the license of the driver, which is tied to their tax ID. The Italian officials say they discovered more than 12 billion, that's billion with a B, in unpaid taxes this year, and have identified more than 2,000 luxury car owners who underpaid their taxes, all by looking at their vehicles. Hey, go to the source. Here's another one that's a little on the seedier side. There's a guy named Joe Francis. He created this video series called Girls Gone Wild. I'm sure many of you have never heard of that before. In 2007, he was charged with felony tax evasion for filing false corporate tax returns. Apparently, he filed over 20 million. I didn't know that business was that big. 20 million of false business expenses in order to keep from paying taxes. He pled guilty and escaped the felony charge. And then we're going to end with a sports story, because this one we can tell all the guys, right? The magic of sports ownership: make money while legally reporting losses. Now, I researched this stuff on the internet. If I'm wrong, I'm wrong. You got to talk to your Bob Gauvreau, your version of Bob Gauvreau, to get the right answer. But here's what we found on the internet by doing our research. The tax code offers business owners a number of ways to erase income through deductions. That makes sense to all of us, right? None better than buying a sports team, as the former Microsoft CEO Steve Ballmer did with the LA Clippers. It doesn't matter whether the team's actually profitable and growing in value. It can still be a write-off. Now, the site that we looked at for our research said in some cases, we found owners could effectively deduct a given player's contract not once, but twice. They're allowed to take deductions comparable to those for factory equipment that loses value as it ages, even as teams almost inevitably gain in value. That's one reason owners tend to pay far lower tax rates than the athletes they employ or even the people serving beer in the stadium. In the particular story we're looking at, they found that a Clippers arena worker made 45 grand a year and paid a higher tax rate than the billionaire Ballmer. And Ballmer, of course, in this report said he pays all the taxes he owes. So folks, when you go to a sports team and you're like, why does our sports team suck? Why don't you change this and that? Why don't you care? I think you've missed the point. And the point is, the owner of that sports team isn't buying it for your entertainment. They're buying it for theirs, or for their ability to use it as a tool. It's simply a tool. It's just an entertainment for the rest of us. Anyways, look, I hope you enjoyed that. Different than dad jokes, because it's not all just about making dumb jokes. I want you to get some edumacation, as you hear me say in the episode here with Bob. Listen, stay to the end of the show. There's a specific training segment where I'm going to simplify and solve a common business problem that Bob and I talk about here in the episode. As always, guys, you can always shoot me a text anytime. My cell phone number is 315-903-7853. And all you have to say is, Dom, let's talk. And then we'll talk. All right, let's get to it. Mr. Bob Gauvreau, how are you?
I'm doing great, sir. Great to be here.
Great to be here with you too. You're very energetic and chipper and ready to go.
Well, you got to get the blood pumping first thing in the morning, and it keeps you rolling throughout the day. Yeah. This is gonna be fun. Let's have some fun.
Are you a morning guy or a night guy?
You know what? I really try to be a morning guy, but naturally I'm a night guy. It's one of those things, right? As a business owner, you're like, I'm just gonna fight through all these difficult situations. So morning for me is like, I don't love it. However, there's nothing like a beautiful sunrise. So it is nice to catch those every now and again.
Yeah. I charge into them. I love the mornings. If my whole day was just morning, I'd be, fine. And then at 10:30, I sound like somebody unplugged a couple of wires so now you know too much.
Yeah, I get it. Yeah. So I won't bug you in the afternoons, and I'll certainly reach out in the morning.
Wind down. Yeah. Hey, Bob Gauvreau, I have a question for you.
Yes, sir.
Who the heck are you? And how is it that you come to be speaking to all these forward-facing contractors all over the world?
Well, great question. And maybe let me elaborate. So I founded a CPA firm back in 2008. Fast forward 16 years. We've built essentially a one-stop shop professional services firm that
Mm,
focuses on working with business owners. And the majority of the people that we work with is actually contractors, which is exciting. Part of the reason, so we've gone from, 0 employees up to now a team of 105. We offer bookkeeping, accounting, tax. We've got a fantastic boutique tax firm. We do fractional CFO related work, really focusing on helping entrepreneurs get to the next level, have
mm,
access to the right financial information so that they can make informed decisions.
yeah.
And ultimately, together, we can change the world. So, the reason I get to speak to a lot of forward-thinking entrepreneurs and contractors is that we've become the financial expert in this space that helps people move forward. And it's something that's really exciting for me. We're passionate about it. And we've got 105 people aligned to just move that mission forward. So,
That's great.
yeah.
Yeah. I have found that accounting is the big uncovered rock for a lot of guys in growth. Like in the beginning, you're just like, let's get a job, let's get jobs, let's get jobs, let's get jobs. And then at a certain point, you realize I don't have the right information. I need data. I
Yeah.
need intel. And a lot of it comes from accounting. A lot of it comes from operational numbers too. We can dive into that a bit. But actually, let me restate our title because we still haven't done that.
Okay, let's do it.
People might be interested to know what you and I are here to talk about today. Tax. We're here to talk about tax and how to pay the least amount legally. Like we want to
Yeah.
legally pay the least amount of tax. And I hope everybody who's listening is on board with that.
And that's not the part that we whisper. Right? Like
Oh,
we
sorry. Well, there
yeah,
you go.
we
This is
we
why I
say
have you as a guest.
legally, yeah, we're gonna
Yeah.
do this, and there's great ways to do it, and it's not gonna be maybe what your neighbor says. Oh, you know what I do? I just do this. It's like,
Mm,
okay, that maybe is an idea, but we just want to make sure that it's legal so that everybody can sleep at night and you can focus on building your business without any sort of skeletons in the closet.
yeah. I'm gonna maybe I'm gonna open my or expose my neck too early, but I'll tell you my stance on tax
Hmm.
before we start, and I'm happy to do that because it's my stance on tax, and maybe I'm gonna get edumacated on it or smartified through you, Bob.
Well, we'll see.
We'll
We'll
see.
we'll see what the opinions are.
Can't even pronounce the word right. Edumacated. Um, I'm happy to pay tax,
Yeah,
but leave me alone to run my business.
yeah,
That's my stance on tax. I'm happy to pay it. I want roads, I want schools, I want all that stuff, but then just leave me alone. And I want to go run the
yeah.
company. So that's my stance on tax.
Yeah, and I think that's more than fair. And so maybe my stance is fairly aligned with yours, where there's an element of tax that we're okay with paying. Let's just make sure that it's the least amount that we have to pay. And
Mm-hmm.
there's right ways to structure our business to ensure that. There's right ways to structure our lives to ensure that, our
Mm,
compensation strategies, and I'm sure we can dive into all of these, but there's a right way and a wrong way to make sure that we can position you exactly that way. We're going to
mm,
pay the least amount possible and then let us run our business.
right.
And if we do it right, you're going to have a lot more wealth accumulation because you can reinvest back in your business, which I always call the golden goose.
It
Nothing
is.
is going to give you the return on investment, not real estate, not mutual funds. It's going to be your business. It's something you know, you're an expert in it. If we can
Yeah.
reinvest in that, the returns are going to be great. So let's make sure that we have the most amount we can reinvest back into this to build our wealth out and build our business.
Yeah. I've come to find it sounds so crazy to say this because these numbers don't get published. You know,
Mhm.
when you look at entrepreneur rankings in a magazine or business owner rankings, everybody's, what's your net profit? And everybody's like 10%. And they laugh, they're like, no, it's not. But I have found that it's hard. I've got a team of business coaches and we all, just like you, work towards one thing, right? Getting the business owner profitable, running the business so it's smoother, less stress. It's really hard to get them to 10% in the very beginning.
Mhm.
But
Mhm.
after we get them to 10, it's a pretty easy jump to get them to 13%. We're talking about net profit after taking wages, salaries, all that's
Mhm.
like living a normal life, like a normal human.
Yep.
And then after we get to 13, our next jump is 15, and then we can get them to 17% net profit. And so tell me, am I smoking something crazy, or do you see that as well? When people start to get everything aligned, profitability gets easier.
For sure. And so I would say that there's phases, right? So, we talked about the contractors who we get started, we start taking on work.
Hmm.
Wow, the profit margins are typically pretty good at that point,
Yeah,
right? You're
because you're
doing all
one
the work
guy,
yourself.
you're
Yeah.
taking all
There's
the
no
money. Yeah.
there's no salaries
You're ignoring a
involved.
lot of expenses. Yeah.
100%, right?
Right.
But as soon as we start to grow a team, we see our profit margins drop down substantially. And that's
Right.
okay and to be expected. But I feel like that's where people start having the challenges. And that's where we end up back down at the, 10%.
Or
And
less. Yeah.
or less. And let me just take a second to say if somebody's telling you 10%, they may not actually know that. They're just kind of talking out their butt,
I,
It
I,
happens.
I know. And how many people do you find mix up gross profit and net profit?
Oh, it's unbelievable. And I got to tell you, like some of these are my clients. When I'll be sitting there in, even a mastermind group, and some of them are my clients, I know what their net profit is. And people start saying, "Oh yeah, no, we're about 12% net profit." And I'll give one of those looks like, "Are
No,
you
you're not.
serious?" No,
No,
you're
you're not.
not.
Yeah.
Yeah,
I've had to
it's
listen,
interesting.
I've had to learn through repetition because I'm not very smart. So I've been doing this for 24, almost 25 years. And I feel
Yeah.
like just now I'm starting to get it. Just
It's you know
now,
what?
all the
It's
little
it's
levers.
Yeah, it's something that as a contractor, we're swinging hammers, we're using our hands, we're artists, really. We're building and we've got a craft. Now throw in the fact that you need to be somewhat of a business finance connoisseur where you understand metrics and you understand what finances mean. And listen, guys, you don't need to become an accountant. You don't
No.
need to become an accountant. You don't need to know all the details of everything. But as the CEO of a company that you're trying to build, there's certain
Mm,
facets and items that you need to have an understanding of, like gross profit. Gross profit to me is the most important number that we have in our business. Cash flow is
mhm.
also important. I don't want to discount that.
No, I get
But
you.
gross profit, that's how much we make on every job that we're delivering on. So, this is the other thing people ask, well, where should our gross profit be? Well, I'm hoping you're at a 25% plus gross profit because that allows us to cover our overhead costs. If we don't have a significant enough gross profit, then we can't really grow our overhead, our team up.
Yeah.
You don't have the margins to be able to do that. So, gross profit is, to me, the most important number for a CEO to be able to track and to follow. And the idea would be as you grow, you want to maintain it or slightly be able to increase it. And there's easy ways to do that.
Mm,
But the fact is, we have to know what it is.
yeah. And we have to focus on it. If you're aiming for
100%.
gross, quite often here I say, look, you have to know which levers to push, pull, and ignore. Right. So what numbers? What are the buttons? What are the
Yeah.
levers? What are the so one of them, and I agree with you, is gross profit. Because if you're aiming for gross profit, if
Mm.
you have a healthy gross profit, you'd be very happy with this crew or this audience because we aim for a gross profit in the 40s, knowing that overheads
100%.
are going to be about 20s.
Yep.
And so then you've got wiggle room to make mistakes, to have go backs, punch lists, we call them in the industry. Like there's a lot of things that happen after the job is done where we have to go back and do the job again, and it gets
For
painful,
sure.
right? So we
Yeah.
have systems to take care of that, but we need those strong gross profits. So when people say, well, what do I ignore? What do I focus on? Like you said, focus on gross profit. Only do
For
the
sure.
deals that are going to make you money. Walk away from the ones that don't. That's hard right there.
Yeah.
That's hard because there's 1,000 things pulling at us. I need to keep my guys busy. This isn't a good deal. That's not a good contract to take. That's not a good person to work for, but I got to take it or I'm going to
Mhm.
lose my guys. And if I lose my guys, I won't be alive for the next deal down the road. And that's
Yeah.
so human. It's like breathing for contractors, right?
Well, and maybe just back to your net profit number. Quick story for you if you're good with that.
Yeah, we love stories here. Yeah.
I actually had the opportunity to work with Tony Robbins
Mm,
for I think it was 2016, 2015 to 2019, 2020, right before COVID. And Tony's office called us in and said, we're looking for a partner in Canada to help guide our business mastery attendees to help them become better business owners, make more money, save more tax. So,
mm,
of course, at that time, we had a very small team. I was shocked and thrilled. And so I did this for about 4 years. I went to all his business mastery events and I met with a lot of different people, hundreds of Canadians that were there every time. There were thousands of Americans. And there were two things that we really focused on. One is that 92% of business owners pay more tax than they legally have to,
Right.
which was shocking.
Mm.
But the other part, back to your net profit, was Tony is a passive investor in about 30 businesses, or at least
Mm.
was 30 businesses at the time. It's probably more now.
Sure.
And he talked about this and said, as a passive investor in businesses, if we're generating a 20% net profit, I'm happy.
Mm.
And he said there's three metrics that I look at. Revenue, if it's growing, and Tony would say if you're not growing, you're dying.
That's true.
So if it's growing, great, check. Gross profit margins are not being diminished, check. And net profit is greater than 20%, check. And he said if all of those things are good, on to the next business. He
Right.
said if any one of those items starts to falter, that's when I'll have to get a little bit more involved in my
Step in.
passive investment and say, what's going on? We've got to do some coaching here. How do
Mm.
we do this better? So, back to your perspective on profits, net profits, as a small business, you'd have to imagine that the investments that he's got, they're full teams built out, there's operational systems in place, like they're more substantial than maybe our businesses as small business owners. But that's the goal. We
Mm.
want to be able to get it up to, the 10, 12, 13, 17, 20%. That's when we're going to be able to sell to somebody who's not involved with the business. They're going to get excited about it.
Yeah.
So anyway, just my perspective
I
on
love
the
it.
benchmark of that.
Yeah. Thank you for that. And then pulling in Tony Robbins, who's somebody else who agrees with us. Who's not even
Exactly.
in the right.
Yeah.
Something else important that you spoke about there is that you spoke to
Mhm.
thousands of Americans and hundreds of Canadians, which is usually in a business crowd. That's what it is. Thousands of
Right.
Americans, a couple hundred
Yep.
Canadians.
Absolutely.
Canadians are the loud ones at the bar afterwards.
And friendly. They're also apologizing. Yeah.
Yeah, I'm sorry. I'm sorry, sitting in front of you
Yeah.
today.
Sorry about that. Sorry, I bought you a drink. Sorry. Yeah.
Yeah, but what's interesting is that we tend to get stuck in a silo.
Mm-hmm.
This is the day of a contractor, and you've probably seen
Mm-hmm.
this too, right? I get up in the morning, get in my truck, I drive to the job site or the shop, I drive to the next place I'm going to estimate, and then I go home. And we start to think, hey, I'm in Cincinnati, that's all or I'm in Dallas, or I'm in LA, wherever you are, right? And it's the same in Toronto or Saskatoon, or I know people like when we say Saskatoon because it sounds like a funny place, right? Moose Jaw, Swift Current, all the great places, Yellowknife.
Yeah.
But it's the same for contractors everywhere. And we start to think that everybody in Yellowknife or everybody in Baton Rouge is the same. And
Mm-hmm.
it's different in Yellowknife. No, it's not.
Mm-hmm.
Business is business. And that's why we have you here to talk about this tax side. So how do I
Absolutely.
structure things? How do I pay the least amount legally? See,
Yeah. So
I didn't
there's,
whisper at that time.
I know, I appreciate it. Yeah. We
Thank you.
say it
Yeah.
loud and proud. Yeah.
Legally.
Legally. Very first and foremost, I would say the greatest challenge that most business owners, or maybe the greatest mistake, is to not have their business structured the proper way. So thinking of, and I'm assuming we've got Canadian and US listeners here as well.
Right. We do. Yeah.
So, we focus on providing tax services across North America. So there's slight nuances between the two countries. But in Canada, we want to be structured as a corporation. Corporation tax rates are around 12% across the country, pretty tax efficient. And the idea is that we have that structure in place, one, to protect us, two, to make sure that we're paying the least amount of tax from our business income standpoint. In the US, there's different structures. They've got LLCs are a very popular structure in the US. An LLC is essentially a flow-through entity where the individual pays tax on all of the income the LLC has. Now, there's another layer that you can elect to pay tax as a corporation in the US, and that tax rate is around 23%. So, we've got 12% in Canada, 23% in the US. And I know it's a huge political thing right now where one of the candidates is talking about increasing the tax rates up to 28. I don't know what their advisors were thinking. Why do we talk about that right now? Let's talk about all the good things we're going to do.
Yeah.
Anyway, she's not making friends, which is too bad. But the idea would be, as we continue to make more money including in Canada. If our tax rate is above 12.2%, we need to be incorporated. If in the US we're starting to pay upwards of 23% personally, we need to elect to file as a corporation so that we fix that tax rate. So that is mistake number one, not having that entity in place.
Yeah.
Then it starts to get a little bit more nuanced, right? Once we're starting to make money and we're starting to build cash, we need to protect it better. And a lot of times what happens is people get bad advice right out of the gates. As a contractor in Canada, you've got an operating company that's owned by a holding company. Great. We pull all of our surplus cash out. It goes into our holding company. Great. It's protected. Love that. However, if you want to sell your business in the future, you're not going to get the tax savings that you need in order to if you were to do it the proper way. So, and this is what I mean. Every individual in Canada gets a lifetime capital gains exemption of 1.25 million, which means if contractors, you sell your business for 1.25 million, you don't pay tax. You have to sell the shares of it, and you have to be the one who makes that sale. If your holding company owns your contracting company, it's not an individual, it's your holding company that owns it. You don't get access to that lifetime capital gains exemption.
Right.
So there's $400,000 of tax that could be saved by making sure that that structure is right. And there's a lot of bad advice out there. Let's make this better. If you not only own it individually yourself, but you include a family trust in there, not only do you get access to your lifetime capital gains exemption, all of the beneficiaries of the trust, your spouse, your kids, the cats and dogs down the street, whoever you want to get into this family trust as a beneficiary, which we could talk about in detail of how that works. But the idea is I get access to my spouse's lifetime capital gains exemption, my kids. So for me, I have 2 kids and a wife. And now I've all of a sudden got $5 million of capital gains exemption. I sell my business for $5 million. I pay 0 tax.
Right.
So slight tweaks that we can make that create tax efficiency. Again, it's about $400,000 in savings per beneficiary.
And that's on the selling event. That's on the selling event.
That's on the selling event.
You sell shares, not the assets.
Correct. And you sell it in the right way, right? This is the challenge. Everybody starts thinking about this as, we're approaching the exit. We've got a year left. We're going to start to think about it. And we go, well, if you had a family trust in here from earlier on as you were growing your business, you'd save millions.
Yeah.
But we can't do it at the end because the trust didn't exist. The appreciation in the value of your company took place over a period of time. We need the ownership to be right over that period of time in order to save this tax money. So it's a huge issue, especially for contractors, right? We get excited. We're going out, we're making sales, we're starting to make money. It gets exciting. We're buying more vehicles. We're maybe investing in real estate. We're fast because we're making money. We miss opportunities like that just because we don't know.
Yeah.
And that's what we're trying to create awareness about.
I'm so glad that you brought this up, because even as you're saying it, in my mind, I'm thinking, I wish there was a way to tell people this. And that's, this, I know that this podcast, it's a podcast and it's on YouTube, is different because we talk about the business of the contracting business. And I don't think other people bring in experts like you to talk about these. These are deep matters.
For sure they are.
And we talk about this on this show all the time, is my business has to be buyable. You want to sell your business, but it has to be buyable. And that process starts out, the earlier you start, the more value you get at the end. Like you said, if you think, in a year we're going to sell because I suddenly have this illness. Well, you could do that. You can sell anytime, but you're not going to get maximum value, or your family legacy or your family trust. What you've slaved for years is not really going to come to fruition because you didn't set up the structures right. And let me add, to be corrected if I need to, this applies whether you're in the United States or in Canada.
100%.
Yeah.
Yep.
You got to do it earlier.
Exactly.
Earlier.
The earlier, the better. And really, I share some of these, and I know, not everybody wants to listen and talk about the technicalities of tax. So I try and keep it at a fairly high level, but more so to say, just know what's possible so that you can start asking questions to your advisors, right? Because as a business owner, if we don't know that there's certain areas that we can We can just make small tweaks to get a lot more value in after tax money. We just need to know that what's possible so that we can ask the questions. As a business owner, we're not making these adjustments. We're working with our advisors to make sure they're guiding us in the right way. So sometimes we just have to ask the right questions
We don't
and
know
know
which
what's
question.
available.
Yeah, we don't know which
Exactly.
questions to ask.
Yeah.
I've had the opportunity to exit two pretty large companies in my life. And in one of them, the accountant, I did not like this guy, but he was clearly brilliant.
Well, he's
Uh,
an accountant, after all.
yeah,
Not all
yeah,
accountants have a 10 out of 10 personality, let's
not
be
like
honest.
you. Yeah, of course, right.
Sure. Well, I'm a one, but we'll go with that.
We can only go up from there. Uh, but he did say something that was an interesting analogy to me. He said, "In on the exit of this business, I'm building you a train with all of the the cars and cabooses on it, and I'm also building you the tracks. And it's going to take 7 years for this train to be built, for the way all of my income had to
Mm,
come in from the sale of this business." And I don't want to get into the details, but you probably already know what that structure was. But we had he had a plan. He had an
yeah.
actual plan that took 7 years to come to fruition from the date that I sold the business, so that I got all of the tax benefits and implications. And I guarantee if we went back and forensically ripped it apart, we could have done better, but we did pretty good,
Sure. Yeah.
right? Because we had a plan and a guy who clearly knew how to work the system to its ultimate. And again, nobody out there should be saying, "Are you probably ripping off the government?" No, I'm taking
Hmm.
advantage of every single tax um, uh, opportunity that's available to me. That's my job. I'm a business
For
person. You
sure.
made the tax opportunities available. I will take them. Thank you.
Absolutely. And I think, too, on that, I think we all need to be aware that not everything the influencers on Instagram are talking about are legitimate sort of deductions as well. Like, God love Grant Cardone. I love the idea of 10x. I love his go big as far as growth strategies go. But no, you shouldn't buy a corporate jet just to get the tax deduction. Like that's not a thing that we do. Some people might be able to take advantage of it, but I always get the guys who are going, yeah, my neighbor bought a motorhome through the business, wrote the whole thing off. So that's what we should do. And you go, well, no, it's technically that's a personal asset. We've seen that reviewed. You're not going to win. Let's sleep at night. Like, let's do it the right way. Let's buy
Right.
it personally. Let's rent it from the corporation. We'll get access to a deduction, right? It's like, let's be strategic. We can get access to deductions if we think it through. But just because the neighbor or your buddy
Said it.
did one thing doesn't mean that that's a legitimate expense. He might be in trouble down the road. We don't
Yeah.
wish that upon anybody, but let's just be strategic and let's do it the right way.
Yeah.
Yeah.
So let's really put a pin in the map and like right in the middle of North America, which has got to be like
Mm,
Nebraska or something like that. So,
sure.
so I'm gonna guess, and I'll probably get emails that I'm wrong, but somewhere in Nebraska, I would imagine. So there's somebody in Papillion, Nebraska. Again,
Okay, you
I
know
could
more
be
about
off.
geography than
I
I
could be
do
off
right
by a
now.
couple
Yeah.
of miles, and I'm sure we'll hear about it. Um, they're running a nice contracting business. Let's say they do kitchen cabinets or home renos, kitchen and
Mm,
bath renovations. That encompasses a bunch of trades right there.
yeah.
Uh, what should they be? And oh, sorry, let me back it up. I'll build you a case study and see if you've got a story that aligns with it. So we got somebody
Mm,
in Papillion, Nebraska, center of the North America, runs a
really, the
kitchen and bath.
universe.
Really, I mean,
Yeah,
everything, right? Just ask.
I agree.
Yeah.
Yeah.
So the kitchen and bath company, they're doing, let's say, $800,000. So they're not at a million yet. They're doing about 800 grand. They've got a good team. They've got a good name in the business. They're definitely on a growth path. The owner knows they can do more. So he's got an upward trend in his mind. Hasn't hit it yet, but wants to get there. What would you be advising them in general terms to do to minimize their taxes and maximize their own self-worth?
Oh boy. Yeah. This is good. Um, See, the challenge with an $800,000 revenue business in that is that you're probably reinvesting a lot right now. So your profitability is probably fairly low because you're likely in growth stage. So the very first thing we want to look at is what is the business structure that we have in place? If you're operating as a sole proprietor, what are
Mm,
your tax rates? They might be low at this point. But you also have risk associated with having your kitchen products, your construction in somebody's home. You've dealt with their plumbing. We've all seen a bad plumbing issue happen and, insurance claims and all that stuff. We don't want that liability personally. So the very first thing I'd say is, even if it's not tax related, we need to look at an LLC structure or a corporate structure to make sure that you're protected. Now, the LLC structure, again, depending on the income, is a flow through entity. So all of the income that's being earned from that business flows through to the individual's tax return. So if we start getting up around the 20% mark on our personal taxes, we want to start looking at whether or not a C corporation or an election to file as a C corporation makes sense. That's structure number one. Number two is I would be looking at the individual and saying, okay, personal vehicles, home office, how are we taking advantage of those? Meals and entertainment, if it's office related, we want to make sure that we're claiming 100%, not 50%. Do we have children that we can be income splitting with, putting them on payroll to get access to those deductions? I always love to say, pay those kids, they deserve it. They also have personal tax credit exemptions that allow us to get a deduction in the business, and they don't pay tax pulling it out. They're expensive. My kids are expensive. And so when we pull this out, they're allowed to pay for their own expenses like private school, post-secondary education, sports. So we're getting access to deductions in our business to take care of that. So I would be thinking about that as well. And then I would be looking at it and saying, okay, now that the business is 800,000, we're starting to get some momentum. Maybe we're starting to build up some cash in our business. We want to look at how we can protect that. So we might be looking at planning out maybe a holding company to look at how we pull that cash out and protect it even more outside of the LLC. So those would be, right out of the gates with the case study, those would be a few things that we would look at. And maybe one last piece, compensation strategies.
Please, yeah.
Depending on where we're at, right? So an LLC, again, it's a flow through. So it's not a huge issue because we're paying tax on the business income. You're able to take distributions and whatnot through an LLC. Once we start paying corporate tax, we have to look at whether or not we're paying a salary or a dividend distribution and which one's more efficient. And I don't even want to say in this particular case, let's just say we've done an analysis because everybody's unique in their personal situation. And we've identified that dividend distributions are more tax favorable for this individual. So we need to focus on the right compensation strategy for this business owner as well. Those would be like the low-hanging fruit. And then we can get into, the whole wealth side. How do we do this in a great way? And if I just want to go on a tangent for one quick second, because here's the thing that I love about contractors, specifically those that are in the building space. We're good with our hands. We like to be able to fix things. You guys like real estate as an investment, and it's great, and who better to do it than those that are building it or have their hands involved or have trade relationships or whatever that is. You can likely build it at a more efficient rate than I could buy it. Right. I have no skills there. The one thing that we have to be cautious of when we start having real estate investment income is that it's taxed unfavorably. We look at that and it's passive investment income taxed at the highest rates. So typically it's taxed at around 50%. There's ways that we can look at that to say, we've got a business over here and we've got passive real estate income over here. How do we convert higher taxable income into lower taxable income? So we just want to think strategically about how we utilize that, right? And I'll give you an example. I won't necessarily quote Nebraska, but I'll talk about Ontario, where we are right now.
Sure.
So the tax rates on passive investment income are 50%. The tax on active business income, so for my construction company, is 12%. So what I want to do is I want to charge a fee to my real estate company to bring down that 50% income and increase the income on my active business, which is 12. It saves 30+%. And it's an easy fix. So sometimes people miss those little nuance opportunities. We're still declaring the same amount of income. We're still paying tax. We're just paying 12 instead of 50. Right. Much smarter, right?
I think you would want to do that. Yeah.
I think so.
We're not going to take a commercial break, but I'm going to give us a commercial break right now.
Okay.
I want to remind everybody that this is the secret conversation that everybody
Mm-hmm.
wishes they were part of. What
Mm-hmm.
you're sharing with us right now, Bob, is gold. And out of 1 million contractors in North America, there's maybe 10,000 that are ever going to listen to this show,
Mm-hmm.
which is sad.
Mm-hmm.
It's sad because you just shared, you at least sketched the outline. And a lot of us can build a sketch of an outline. Somebody says, build me a deck. I want it to kind of look like this. You just go do it. Same with the
For
kitchen,
sure.
same with that. You just gave us the sketch for what to do. And so many people will never, ever hear it. So I just want to remind everybody listening, this is the secret conversation that you've always wished you were part of. And if you're not finding an expert like Bob or somebody else in your local, or call Bob, you're missing out because there's people out there like Bob that know how to build this, just like you know how to build an 8-sided deck and pergola that goes down 3
Yeah.
elevations. To you, it's nothing. To Bob,
Yeah.
this conversation, it's just every day. Go find your own Bob Gauvreau or go find Bob Gauvreau.
Yeah.
That's what. So when
And
I say it's a commercial break, I want, you know what I mean? Like,
yeah.
this is the conversation that everybody wishes they were part of, and we're in it
And
right now.
for those that are listening, we've all got friends in the contractor space who also need to hear this. And these are the
Yeah.
conversations that it's like, please, again, I'm on a mission to empower all contractors, all entrepreneurs with this information. I can't do it alone. You can't do it alone. We're trying to share this knowledge and this wisdom. But if you know somebody, share this with them. Grab this link, share it out to
Right.
them because you
Yeah.
can make an impact in their lives by sharing this with them as well. So, like, let's make this impact together is really what we're trying to do.
Yeah. I love it. Let me add another layer on here that you and I did not prepare for.
Okay.
But you deal with lots of contractors. So to both you and I, this is second nature, the family business. So, and
Mm,
I'm just going to use the standard one that I see all the time, dad to son, but it could be dad to son-in-law, dad to daughter. It doesn't matter, but
mhm,
parent to child or owner to foreman or GM.
mhm.
No, let me take that one back. We got to go parent to child for this. What are there special strategies or tactics that you would put in place if you've got a parent to child transfer of business ownership?
Yes. Is that where I leave it, or do you want me to talk about it? No.
Well, probably, it's a
Kind
podcast.
of open the
I'm
door, right?
supposed to ask good questions and then shut up. So
No,
I'll just be quiet
it's a
now.
fantastic one, and something that we see very often. And when we take out the emotional part of it, right, and that's really the challenge with family business is
Mhm.
taking out the emotion of it. And for any of the dads who are listening, we've got to get this in place. We've got to put this in place. Or dads or moms, and the kids who are coming in, they're hungry, they want the opportunity. They've likely earned it. So let's start the conversations about how we incorporate them into building something bigger together. Like, let's give them their chance. I see too many uh, people who don't want to retire out of that role because it's part of their identity, and it's impacting the business, it's impacting family relationships and all that stuff. So there's my political rant, just to keep in mind, guys, that there's a lot more that can be done if we do this the right way. But here's the thing: I want you to get paid. I want you to get paid for what you've created. And how do
Mhm.
we do that? And so there are a bunch of different strategies and different ways that we can incorporate that. But one of the things that we like to do is do it without incorporating or triggering any tax on that situation. So I'll give you an example of one way that we do this often
Sure.
is we go through and we look at the business as it stands. Mom or dad own it. The kids are in it. They want to take over ownership. So we come in and we establish the value of the business. So we've got business valuation people. We go in. We look at all the more recent sales transactions, everything that's out there,
Mhm.
margins, return on investment, earnings multipliers. We assess all of it. We come up with a proposed value based on what the market is saying. We come up with this value. Let's say it's $1 million.
Sure.
We freeze the value of $1 million for the parents. You've created this asset. And
Right.
now what we do is we say, okay, kids, we're going to bring you in. So for every dollar of value that you create in this business above 1 million
Above.
gets attributed back to the kids.
Okay.
Mom and dad get the million because they built it,
Yeah.
and the kids get to take on anything above that. Like, give them a chance to be able to earn and grow it.
Hmm.
And what we do when that happens, we actually don't trigger any tax implications related to it. We freeze the value, and then we've got another plan. How do we extract some of that $1 million value for mom and dad?
Hmm.
We can have it so that the kids are maybe buying it out over time, that maybe they're looking at that $1 million and they're redeeming it. The company is redeeming some of those shares, some of that value. Maybe they're just getting a set dividend amount that comes in to pay out that $1 million. So we look at it and say, how do we do this the most tax efficient way possible and
Hmm.
get mom and dad paid? Sometimes mom and dad don't want the cash either. They're set. They've been working hard. They've been putting their investments away. They don't need the cash on the sale of the business. But when the kids sell the business, that's when they'll eventually get paid their $1 million too.
I
Right. So if
see.
they sell it for $2 million in the future, the kids get $1 million, mom and dad get $1 million, everybody walks away happy. So that's one idea of how we can do that and transition the business while mom and dad are still part of it, but letting the kids have opportunity for the growth side of things.
Yeah. Brilliant.
Love it,
That,
right?
yeah, I mean, but these are the conversations that have to be had, even if you're
Hmm.
even if you're not ready for the conversation.
Yeah.
And you said something really important here that has nothing to do with accounting, and I want to give you a high five for that. It's hard for I'm going to keep using dad to son, and everybody listening understands. I'm just saying parent to sibling. I don't care what your personal situation is, or not parent to child. Your identity is wrapped up in being the owner of this business, right? So
Hmm.
Dominic's Kitchens and Remodeling, and I'm Dominic. I'm pretty tied up. That's my identity. It is who I am. It's what I've done. I wear my uniform on the inside. I am
Hmm.
Dominic from Dominic's Kitchens and Remodeling. And everybody else out
Hmm.
there can laugh, whatever your company name is, right? So now we've got my son. My son's name happens to be Joseph. Let's say Joe wants to come in and take over. Take over what? Take over me? Take over my personality? Take over my soul? You can't do that. And so I come at your same situation a little bit differently. I'm like, how do we make room for Joe to come into the business? If we
Hmm.
use the model of a home remodeler, that's easy. If you do it with commercial, it's easy as well. Maybe Joe becomes a plumber or an electrician or cabinet installer, and he builds the cabinet install side of our business or builds the plumbing side of our business or whatever. And then over time, he gets really good at project managing, estimating, et cetera, from his sub trade. And when it's time for me to hit the motorhome and golf or surf, for me, it's going to be fishing and hunting. He already understands the basics of running a contracting business. He absorbs my side, but he's had the chance to grow on his own,
Absolutely.
right? Because you
Think of the power of that.
oh, it's and the smartest guys, the smartest business owners do that. And I see this, I get to see this. I'm fortunate. I get to see people who've done it right and people who've done it wrong. And I
Hmm.
will say this at the risk of offending some people, but you can change your angle now. If your kids grew up, came through high school, started working in the shop, sweeping the floors, and then suddenly started working for you, and now they're the vice president or the estimator or the project manager or the foreman, you've limited their growth because they didn't
Hmm.
go work at Starbucks or Home Depot. I don't care where they go work, but get them out of the company to go work somewhere to get new, fresh ideas and
Hmm.
then bring them back later when they've got a little bit of experience. Now, if you did grow somebody right into the business, that's fine. We can obviously work with that, but you're going to have to give them that business knowledge somehow, somewhere,
Hmm.
or you're stifling the growth of the business.
Absolutely.
Strong
It's
words.
interesting. Yeah. Two sort of examples. We're just recently looking at acquiring another CPA firm, and
Of
there's a
course you are,
father,
Bob.
right?
Of course you
Well,
are. Yeah.
if you're not making moves, like this is we got to have fun while we do this, right?
Yeah.
We were looking at this firm, and there's actually a father son combo
Mm-hmm.
in there, and the dad is partners with another guy. So two partners, and one of the sons is in there. So we're looking at acquiring them, but also saying, hey, come join us on this journey of creating something wonderful.
Right.
And so son is excited and dad is excited. They're like, this is amazing. you guys are crazy to not want to be part of this journey. Like, amazing. And, here I can give this opportunity to my son as well. The other gentleman was saying, absolutely not. Like, I'm dying at my desk. And so stifling the opportunity of, this other group and one of them being a son. So, it's all of a sudden created a relationship challenge in there too, because someone's just going, no, it's too attached to my identity. It's who I am as an individual. I can't let it go.
Yeah.
We have to, as business owners, we have to get out of that mindset,
Hmm.
and unfortunately, if this particular individual dies at his desk, the value of the business is likely gone at that point because it's not operational.
Mm.
So, we've got to, as business owners, take our identity away from the business. We got to pull it out. And the other example is my son. He's 16,
Hmm.
and he's now starting to talk. He loves the idea of entrepreneurship, but he's like, okay, accounting, I actually really like it. And I said, well, great. I definitely want you to come in. I want to teach you. I want to mentor you. Like, we've got a good thing happening. I said, but just keep in mind, you're coming in as an employee. This is not something, we're not doing this together. This is my business.
Yeah.
And you're going to come in and you're going to work for the same opportunity everybody else has. And in fact, what I would love to do is train you and give you the skills, and then you get to decide whether you want to be part of my company or
Hmm.
you want to go do something on your own. And I'm looking at this going, this is my business, and this is the way that, like, I'll
Yeah.
sell it to you or whoever, but it's not going to be a biased situation. We're going to run this business as if it's here to stay, and it's nobody's being given anything. So I've got the two sides looking at it and going, okay, it's not my identity, but it's a business and it has to run that way where there's no
Yeah.
bias for family. And then I've got the other side where people just have so much identity attached to it that they can't let it go. And it's heartbreaking to see that, because I just know how much, the financial compensation for being able to remove your identity away and get
Mm.
your family paid for this, like, what a legacy you could leave if you're thinking strategically versus this is just who I am.
Yeah.
I can't get away from it.
And these are real situations that you and I encounter all the time.
Absolutely.
Hey, and I see, by the way, I see lots of family businesses where the child, the son, has worked their way up from sweeping the floors and is doing great now as
Absolutely.
the the heir apparent. But I also see
Yeah.
it where it's not working, where there's challenges in the business. And Bob, I see that the subtlest, the lightest things that need to change. One of them
Hmm.
is stop calling everybody at work mom and dad,
Yeah, it's
right?
awkward, right?
It's
It
well,
makes everybody uncomfortable.
and I understand from respect. If my son ever called me Dom, it better be a very serious situation. Like we're in the middle of like negotiating on a car or something, right? But if he
Yeah.
came to work for me, it changes immediately. You can't call me
Yes.
dad, and I can't call
Yeah.
you son. As a matter of fact, and I know our last names are the same, but we've got to kind of ignore that.
Hmm.
But don't say, hey, go talk to dad or daddy. Go talk to mom or mommy. Like, even though
Yeah.
it's your natural language, and I understand the respect to that, and a lot of people here strong in their faith and their family, all those things are important. But you can't have that language internally and then still give that person the chance to stand on their own 2 feet, because
Hmm.
everything they do, good or bad, is going to be, well, Joe is the son, Joe, little Dominic, he gets what he
Yeah,
wants. Little Dominic screwed up, didn't get reprimanded like I did, and your company is going to suffer.
for sure.
Yeah, that
Yeah.
little tiny words, mom and dad. You just have to take it out of the language. I hate to say it.
Yeah, and I love family business. And I feel like there's nothing more magical, to be honest, than seeing that sort of succession plan take place and the
Mm.
next generation being set up for success, and they take it and they own it and they build it even greater, because of the opportunity they've been given. Like, it's a beautiful thing to be part of.
Yeah.
But there's right ways and wrong ways to do it, to your point. And
Yeah.
let's do it the right way. And back to the tax side, let's make sure that it's structured the right way. Because if you just think, hey, we're just turning the keys over, it doesn't quite work that way.
Yeah.
There could be terrible tax consequences of that sort of decision. Let's plan it out. Let's have a strategy. and let's do things the right way so that we can pay, again, the least amount of tax legally possible.
Yeah. Now, I don't remember the exact tax structure of this one, but I was working with a hardscape company. So, like, they
Mm.
do landscaping, but landscape construction. Like, you want it to be a hill here and you want it box there and retaining walls and paving stones, all that stuff, right?
Mm.
And so the dad wanted to make room for the son to come in. And that was how coaching started. But it became pretty clear pretty quick. Dad was still in his like early 50s. He wasn't ready to go anywhere. And the
Mm.
son, energetic guy, smart guy, feeling stifled. Like I can't do anything. I'm not in charge of anything. I'm not growing and I'm not responsible.
Right.
Great guy, ready to be responsible, ready to take ownership. And so we finally came to the point where we're like, well, let's spin off a side company that has something to do with this company. And so he
Mm.
spun off a landscape maintenance, like, your regular lawn mowing and trees and shrubs and like the maintenance side. But because that hardscaping business was in place, we were able to spin off what became a $2 million business in under 2 years on the maintenance side.
For
Like,
sure.
like that.
Yeah.
And I'll call him the kid, no disrespect. They're probably listening to the show, but the son, like he was ready to go. He had all the
Mm.
smarts, all the drive that his dad did when he started it, but dad wasn't ready to literally get out of the skid steer. Literally, like, I mean, he did not want to
Yeah.
get off the tools. He didn't want to stop being the man. His name was the name of the company.
Yep.
And then, but the son, we were able to get him up to a $2 million business in under 2 years.
Well, and how cool is it? If we think of, Jay Abraham talks about the three ways to grow. And one of them is looking at your existing clientele and saying, how do we sell more to those existing clients? They know, like, and trust us.
Yeah.
They've had a good experience. Well, what better if you're doing landscape projects than the ongoing maintenance related to that landscape once it's done? Like an
Yeah.
easy add-on solution that, and you talked about this before too, spinning out, looking at a separate business that's a collaborative or a synergistic opportunity. Man, we've got all the marketing material and clients sitting right there. Why wouldn't we look at opportunities like that? And for any business owner, whether it's family or not, great opportunities to continue to segment out and offer add-on
Yeah.
services to those existing customers. Great way to grow and scale our company. So I love that. That's great advice.
Now, I don't want to pretend I'm you because I'm not. But then wouldn't that, his name's Jake. Jake is the dad. So would Jake be able to charge his son rent and fractional bookkeeping and fractional use of the office? And then wouldn't the son have to pay those perhaps inflated expenses back to Jake? Right? Because isn't we're here to talk about taxes, but that's where somebody like you would come in, rubbing his
Mm.
hands, going, okay, I got all the hotels on all the blocks, on all the monopoly spaces. The game is mine. Isn't that where you come in and
For
make
sure.
the
And
magic?
here's a really good example of that. And that's actually a great point. So likely, again, I don't know this circumstance. You do. So I'm going to just play it out as if
Sure.
I know some of the details, but I don't. So let's just say for a moment that dad obviously has built a great company.
Mm-hmm.
They've got a lot of people operating within this company. There's a chance that dad's making more than $500,000 net a year. Okay, because that's what happens in great construction companies. Once you get great coaching to help get your net income up, your taxable income continues to go higher. Now in Canada, when we go past $500,000, our tax rate jumps from 12 up to 26%.
Mm.
And if dad were to open another company, his group would be considered, and sorry guys if this gets a little nerdy for you for a second, but they would be considered similar ownership. They would all be taxed at 26%. However, son comes in, starts his own company. It is
Mm-hmm.
not same and similar ownership with dad's company. Son also gets $500,000 at 12% tax. So why would we start looking at some of that income over to son to save tax money? So not only can
Mm.
we start charging and sharing overhead costs to make it even more profitable, but now we can look at son being able to get a lower tax rate by just looking at a different structure. So there's always, and guys, if you're listening to this right now, there's been a lot of different ideas thrown out. The idea really for you is that you need a personalized plan. And everybody's got to have their entire situation analyzed to say, how can we make this the best for you? In this case, these guys have some opportunity for income splitting for sure. For you, it might be setting up a family trust. It might be looking at your business structure, whatever it is. But it's going to be personalized to you. These are concepts and ideas that can be taken advantage of, but let's make sure that you have all the right questions to ask and that you're working with an advisor who's going to customize an approach for you.
This is, like I said earlier, this is the secret conversation that everybody wishes they were part of. And you and I just had it with them. So that's good.
Yeah, and again, I know based on our ability to connect today and previously, we're on the same mission. We're trying to help contractors just get the information they need to move their business and their lives to the next level, right? And so this is, as much as we kind of geek out, or I kind of geek out on technicalities, really. What we're trying to do is just get enough information in there that you guys can make your lives better, become more successful, create more wealth, and all the good work that you guys do can change the lives of those people you serve. That's all we're trying to do. And I'm excited about it. So hopefully this has been super valuable.
Yeah. Well, it has been. I've taken lots of notes too. So, hey, but if somebody wants to find you and ask more, because everybody's situation is specific and not everybody's Jake or his son, not everybody's the example, but not everybody's in, what did I say, Papillion, Nebraska? Wherever they are.
I don't know. The center of the universe, really.
Center of the universe, really. That, and in Canada, it would be Toronto.
Right.
Which, yeah. But listen, if somebody wants to find you in this big wide world, how do we go about doing it? I get the feeling you're not hard to find.
No, we're pretty active and we're pretty much everywhere. But probably the best spot, if you wanted a quick connection, go to our website, which is gauvreaucpa.ca, GAUVREAUCPA.ca. On our main website, we've got a little chat bot there. It goes right to our sales team who's waiting there to get you connected with the right professionals. So if we can help support in any way, that would be the easiest. Social media as well. Any of the platforms, Gauvreau CPA is our handle. We're also on YouTube as well. We've got a podcast called The Wealthy Entrepreneur. Feel free to check that out as well. So if you're looking for us, you can find us.
Yeah. As I often say, if you can't find me, you ain't looking. Right?
Exactly.
I mean, really, you could even misspell my name and get, oh, there he is. I think that's that guy.
Yeah.
No neck, one eyebrow. Looks like him. Yeah, that's him.
Yeah.
All right, Bob. Thank you so much for joining us here again. I have a sneaky suspicion that we'll have you back again to talk about another wrinkle in the financial management side of things at some point in the future, because I think it was just an excellent interview. Thank you.
Yeah, I would love that. Again, any way I can help, that's what we're here to do.
All right. Have a great day, Bob.
Yeah, you too.
Thanks. Bye-bye. Well. What did you learn from Bob Gauvreau? We're talking about taxes and how to pay the least amount legally. And then what can you put in place? What is it you're going to do based on what you learned here today? Because it really is a secret conversation. It's the kind of thing most business owners don't talk about until it's too late, or they just never talk about it. But now that you've heard it, it's in your head and we can't take it out of your head. You've got the education. And even if you didn't get all of it, you at least, what we did is we went into your brain and we sorted through all the boxes that are in there. And there's one box there that talks about how to use taxes as a business owner to move yourself forward in your life and impact the legacy of your family name going forward. We took that box and we just opened it a crack. A little bit of light just went in there. Maybe that's all we need right now. But now that box is open. The dust is blown off. Maybe a little sunlight is filtering into there and you're thinking about it. You're looking at that now and you're like, that box is open in my brain. And now you're going to be aware of it when it comes up. The next time you're in front of your accountant, you're going to ask them questions. If you don't get the right kind of answers from your accountant, you might think to yourself, do I have the right accountant? Am I getting the right advice? And you see what we've done? That one little question asked today has an impact or a ripple through the rest of your life and the generations that you are about to impact through business ownership. Guys, let me stop for a second. You as a business owner are an impactful person in the legacy of your own last name, whether your last name is Smith or Sanchez or Chan or Singh or Rubino. You're impacting the legacy of the people who follow after you. People are watching you. You may not think they're watching you, but they are. Your nieces, your nephews, your in-laws, your sons, your daughters, your wife. All of those people are watching you and they're saying, hey, look at the smart moves that you're making. Hey, look at that thing he tried that didn't work. But they don't know that you've tried 1,000 things. and 800 of them worked and 200 didn't. I don't care. I'm doing the things that work. But people look at that, and even though it might be hard when we have our failures, what people also see is the successes. That's a guy who never stops. That's a self-made man or woman. Look at everything they've created out of nothing. And you may not know this, but one of your grandkids or your nieces or nephews one day is going to say to one of their friends, you know what? My Uncle Steve was a great man. My grandpa Steve was a great man. My Aunt Sandy was a great woman. She built something out of nothing. And what I learned from that was this: boom, boom, boom. You and I will never know that conversation happened, but that will drive your family last name forward into the future. You get to choose what the message is, because no matter what, people are watching. Anyways, hey, listen, I want to share an email that came in. We get some great emails from time to time. Yes, I change the names quite often. In this case, we're going to call him Ben from Beaverton, Oregon. I mean, I don't know how many other Beavertons there are in the States, but this is an email from him. It says, a heartfelt thank you and a big win. So I'm going to read his email here. Hey, Dominic, I want to take a minute and look at how we got here. 7 years ago, I left a disorganized, low quality company where I was in sales to start my own replacement window business here in Northern Oregon. It wasn't easy to leave. I'm not a big fan of change, but I hate disorganization more. I'm sure change is tough for everyone. Growth has felt slow and I've often felt stuck, but I've kept pushing forward. Hey, that links back to what I was just saying a second ago. People are watching. Keep pushing forward. Anyways, back to what Ben is saying here. I've been listening to the Profit Toolbelt podcast on and off for a few years, and your insights have always resonated with me. I requested the go back report a while ago, but it sat on my inbox for it sat in my inbox for 2 months because I was just too busy to get to it. One Saturday morning, I'm looking at the rain. While looking out at the rain in Portland, I finally decided to dive in, but I got stuck and I reached out to you for help. After going back and forth for a few weeks, I finally took the leap and joined the Construction Millionaire Bootcamp. And he did. We're looking forward to having him in class soon. My wife, who's been with me since our early days in Gresham, my wife, who's been with us since our early days in Gresham, I hope I'm pronouncing that town right, was nudging me the whole time, and I resisted, though I'm not sure why. Now that I've made the decision, I'm incredibly excited, and I can't wait for boot camp to start. And so what you guys don't know is that when boot camp starts, there's actually pre-work, which includes a ton of the things we talk about here, but all with more context. There's also more tools. We don't give these away as professional development tools, as you'd imagine, because they're part of the boot camp starter. So he's in the middle of that. That's when we're getting this email from him right now. There's also videos that go along to support it, everything to get you ready to make the most of this 6-week program, right? Anyways, I've already seen a major change just from the go back report. I adjusted how I estimate. Catch this, folks. I adjusted how I estimate, and it looks like the profit on my next job here in Beaverton will be about 50% more than I've ever made, simply because I finally know how to price properly and with confidence. I'm going to stop there for a second. Guys, he hasn't even started. He's only doing the pre-work. He's doing the pre-work, and he's going to make 50% more than he ever made because he knows how to price properly and with confidence. Boom. Ben, and you know your name's not Ben, but you do know who I'm speaking to. Good job, bud. You're doing great. And he finishes with, thank you so much for the guidance and the push I didn't know I needed. I'm looking forward to what's next. And then I signed it as him, Ben from Beaverton. Again, his name's not Ben, but he is in Beaverton. Listen, this story could be told a million times over a million years. There's lots of you out there that want to get paid finally from the business. You know, Ben and I, Bob Gauvreau and I talked about business owners not getting paid, whether you take dividends or wages. And this situation comes up all the time. I'm talking to you, Al, Colin, Chris, Nick, Lucas, Jake, Sandra, Dan, Vin, Alan, all of you who came to us with questions like, I'm working hard, I get project profits, but I'm not taking wages. My guys are always getting paid, but sometimes I'm not. That makes for a very difficult kitchen table conversation. And all of the coaches on my team, we report back and we do our debriefs as well, right? Coach Ryan, Coach Jake, Coach Lee, myself, we're all talking about this. These guys are working so hard, but they're not getting paid. They're not getting paid. They're the last person in the company to get paid. And so one of the tools that we use in business coaching is something that we're freely sharing with everybody. It's a professional development tool, right? What's a professional development tool? It is a foundational element that you need to grow the business going forward. Now, there's two situations here. You already have this tool and you're not using it, which is kind of like Ben from Beaverton. Oh, I almost said his name. He had it but wasn't using it, or you don't have it. So right now I'm speaking to, well, both of you really, but those of you who don't have the Go Back calculator, it goes by 3 different names at least. So if Coach Jake is using it with you, he might call it the 1 hour job. If Coach Ryan is using it with you, he might call it the cost of an hour. If Coach Lee is working with you, he might call it the cost of a Go Back, or what is a punch list worth for 1 hour. And the reason it has different names is because it's a very specific tool. I want you to imagine your favorite toolbox. In there's a tool that you only use when you know you need to use it, and it does one specific thing really well, but that one thing shows up a bunch of different ways. That's what this tool is for us as business owners. We commonly call it the Go Back report because it's easy for people to text us, but it does go under different names and it's used in different ways. If you ever get stuck, text me. Just text me and ask, even if you have this report, right? My cell phone number, and you guys have heard it before, but I do want to make sure you have it. Say it with me. It's 315-903-7853. I want you to have that feeling, shoulders back, chest out, chin up, deep breath in. That feeling of power it really comes from having the confidence to go into a situation knowing what's on the other side. You can figure out how to pay yourself as an owner out of the Go Back report. As a matter of fact, the world will pay for everything you need if you understand how this report works. The world will pay for your next project manager, your next foreman, your next sprinter van, your next building, your next CNC, your next overhead crane, your next whatever you want, if you understand how to use this report. What we do is we take the emotion out of decision making and we apply logic. And we do that on purpose. Logic is a great driver. It's how you make decisions based on confidence, right? So anyways, this is one of those tools. It's just one Excel spreadsheet. By the way, it's 10 questions. And they're 10 questions you can find on your own, whether you have an accountant or not. You might be going, well, Dom, I don't have a bookkeeper I trust, so I can't get this data, so I probably can't use the report. No, you can find this information. You don't need a fancy accountant. It's all operational info, right? It's just 10 questions. Every single expense, everything in the company without missing anything. So you know everything down to the penny about what you need to understand how much 1 hour of your time is worth. And keep this in mind, right? When I hire your company to do work for me, let's say you're going to build me a pool, or you're going to renovate my kitchen, or you're going to do tenant improvements on my commercial space because I'm a new dentist and I'm moving in. What I'm doing as the customer is I'm basically renting your business for X amount of hours. Well, how much does it cost to rent your business for X amount of hours? You and I need to know that number. How much is it to rent your company for 1 hour? There is real money there, right? In the Construction Millionaire Bootcamp, which we talked about with the gentleman from Beaverton, we talk about estimating for profits with confidence. That's an entire module, by the way. Estimating for profits with confidence. The learning goal from that particular module is to be able to estimate jobs properly so you can still win them and be competitive in the market. But also, this is important, if somebody starts to negotiate with you, there is a thick red line in the sand that we cannot cross. That thick red line is your hourly number. And if you don't know that hourly number, you could be, and you're probably taking jobs that are losing you money. And Bob and I, in this episode, talked about the minimum gross profit number you must meet in order to hit your net profit. Net profit is that wad of cash held together with the blue elastic from a broccoli bunch in your pocket. That's net profit. That's where you get the money you take home to your family to buy your kids braces, or hockey equipment, or football equipment, or travel cheer, or choir for your wife to go on a trip to wherever she needs to go, right? Branson, Missouri. I don't know, but wherever she needs to go, that's the cash that you take as net profit. You can't have that unless you have gross profit first. I want to, I think this is a good place for me to quote a very smart and strategic podcast listener who's in Winnipeg, Manitoba. He knows who I'm talking about already. He says this: when we finally showed him how to finally get his numbers in order, he realized he'd actually paid out of his own pocket, out of his own savings, actually out of his own line of credit, $3,000 to build somebody else's kitchen. He also said to me he loved that lady and was proud of the work he did, but he didn't love her enough. He didn't love her $3,000 enough to buy her a kitchen. He has since turned that around in spades, in droves. He's done a great job. If you want to get paid what you're worth out of this business, if you want to really run this as a serious business, even if you want to take first steps at doing that, send me a text. My cell phone number is 315 903 7853 and say, Dom, let's talk. Or if you just want to get the Go Back report, then just send me the words Go Back report. It's pretty easy. Pretty easy thing to do. We've just simplified and solved a common problem for more business owners, which is why am I not getting paid what I'm worth? I hope you enjoyed today's episode. I want to thank Bob for coming on again. And folks, remember, this podcast is only a tiny replacement for the day when you and I can share a cup of coffee or a glass of wine across the table with each other. And I look forward to that day more than you know. And we'll talk to you soon. Thanks.